Hey everyone, Lucid recently informed investors of the progress they made in 2023, which has a lot of investors talking about Lucid stock. So in this video, I'll review those highlights on why everyone is talking about Lucid stock. So let's jump right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the CEO saying that through 2023, we dramatically expanded our advanced manufacturing plant in Arizona, which we call AMP1, and that was in preparation for the Gravity. They're going to be able to produce their Gravity, which is their upcoming SUV, and the Air on the same manufacturing line. That's impressive to be sure. The SUV that's slated to come out in late 2024 looks absolutely amazing. If you saw their presentation, the unveiling of the Gravity SUV, it's an amazing looking SUV, let alone an EV. One of the best looking I've seen on the market. So if they can, on schedule, produce that SUV in 2024, it will do wonders for Lucid heading into 2025. That's when the majority of the sales for that SUV will come through because it's not going to come out until late 2024. So, understandably, investors are excited about Lucid and the launch of this new SUV. In 2023, the company also raised $3 billion, including their unparalleled support of $1.8 billion in equity funding from our largest shareholder, the PIF. The Saudi Arabian government has been a large supporter of Lucid and a major investor in Lucid shares. They raised another 1.8 billion from that equity source in 2023. Management said they've got enough money at least to last them until they launch that SUV. However, if they have an opportunity to raise more money, if the stock price explodes higher, for instance, I think they'll capitalize on that opportunity and sell more stock to raise capital, given that they're still in growth mode, they're still in investment mode, and they're still losing hundreds of millions, if not billions of dollars on the bottom line. So they will, I think, opportunistically raise more capital. Also in 2023, they demonstrated the effectiveness of their technology with their licensing deal and their business with Aston Martin. That really signified the popularity, the effectiveness of their technology. The fact that Aston Martin would rather license it from Lucid instead of developing it in house says a lot about Lucid's technology, how effective it is, and its reputation among car manufacturers. It was truly impressive to be sure. Management saying, of course, we haven't yet scaled this business. We're taking a methodical approach, which is prudent, and we're pleased with what we're seeing thus far. It's true, Lucid has grown slower than expected, and management is telling investors, look, it's true, we haven't grown as quickly yet. We haven't scaled the business, but we're moving forward carefully. We're moving forward methodically. It's difficult to start a brand new car company. It takes billions of dollars in investment, and even then, you're not guaranteed success. So the challenge in front of Lucid is incredible. However, if they succeed in this feat, if they succeed in developing this company and becoming a mainstay in the EV market, then the benefits could be just as large. So it's a big risk versus reward opportunity, and Lucid is trying to proceed carefully, not trying to just put their pedal to the metal, so to speak, and just go all out. They're trying to move forward carefully, cautiously, while observing what's happening in the market, observing changing consumer behavior, adapting, iterating their approach, making sure they're going forward effectively. So, management telling investors, we acknowledge that we're growing slowly, but we're happy with what we're seeing. We're purposefully growing slowly. They go on to say that we developed and have been transitioning to our own in house over the air software infrastructure. This not only helps our over the air functionality, but it's also a source of cost savings. Management saying that we can make our software infrastructure in house at a lower price. then we're paying for it right now by outsourcing it. So we brought it in-house. This is often a decision that management teams face. Do we outsource or do we insource a specific service or product that we need for serving our customers? And if the cost to outsource is lower, then you outsource. But if the cost to insource is lower, then you insource. Of course, you look at this holistically as it relates to your complete strategy and the risk involved, and you make that decision. That's what management gets paid big bucks to do, to make these sorts of big decisions. And this is another example of a big decision and management choosing to bring it in-house. So let's pay attention to this key development and how this is going to impact the company going forward. I'm going to listen to what management says regarding this change and how it's going to impact the company's profit margins going forward. So this was an interesting decision, to be sure. But management saying it wasn't all great news in 2023. We also had some challenges. Firstly, the macroeconomic and higher interest rate environment impacted mainly in this market. And most people that purchase a vehicle finance the vehicle. And so interest rates are an important component in a vehicle purchase, EV or legacy. So with interest rates moving sharply higher in 2023, that decreased demand for EVs and cars alike. So Lucid experienced that. That was a challenge when customer demand sharply decreased because of the higher monthly payments. Lucid, on top of that, is a very expensive car. It's a luxury car. So it's even more economically sensitive because as interest rates go up, that monthly payment on absolute terms goes up much more. 5% increase on a $1,000 per month payment is a lot more than a 5% increase on a $400 per month payment, right? That's $20 versus $50. So the absolute number is larger even if the percentage increase stays the same. So Lucid is more exposed, more economically sensitive because of that fact. On the flip side, Lucid's buyers are more affluent than others, being that it is a luxury car. So that could be a benefit as well, because some of those buyers are more likely to be cash buyers, just paying it off completely upfront without needing financing at all. So there's a bit of give and take there, but Lucid management saying that primarily it was a headwind. It was a significant headwind for the company. And they also faced some technical challenges with commencing production of the rear-wheel drive Pure in the fourth quarter. But this is something that they said they overcame and they're now ready to increase. They had a bit of a challenge, but they overcame that and they're ready to commence going forward. So it wasn't all great news for Lucid. In fact, it was a challenging year for Lucid. It was a challenging year for EV companies overall. Car companies overall, it was a challenging year, mainly because of the higher interest rate environment and the fears of an economic recession. Hopefully 2024 will be better, although for the entire EV market, I don't think it's going to be that much better. Interest rates are slated to remain much higher for the rest of this year. The Federal Reserve has indicated that they're going to cut interest rates this year, but only slightly. So it's not going to be a big tailwind for the EV industry or the car industry overall. So it might be another challenging year in 2024 in terms of the macroeconomic backdrop. In terms of Lucid specifically, they've got some exciting initiatives that we highlighted here in this video. Most importantly, the launch of the Gravity SUV. That's what I'm most looking forward to with Lucid. And of course, I'll keep you posted on those developments on this channel. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.